Good morning and happy Friday to everybody. Welcome to today's edition of Daily Video Insights from Toggle. And if you enjoyed these insights, please subscribe to our YouTube channel or check us out on toggle.global. My name is Jan. I'm the CEO and co-founder of Toggle. And today I'm going to take you through an insight produced for a company called Amerisafe. This is one that's probably going to speak more to those with a technical analysis background amongst you. It's really a particular configuration of an indicator called the MACD, M-A-C-D, and a K-D Stochastic that is suggesting that you could actually see a bounce in the stock price. Now, let's walk through this step by step just so that you can see exactly what we mean. So, as you know, this is the start of the insight that Toggle produces, and it's effectively saying, look, over the past 12 similar occasions when we've had this configuration, a typical response for the stock price subsequently was a rise of about 14% over a 6-month horizon. So this is roughly the median trajectory along, of course, with the ever-present confidence interval. Now, of course, the paradigm doesn't always assert itself, and so there is also a point, in this case below 52.97, where the odds of this paradigm still applying today have diminished significantly, and so we would consider the pattern basically invalid at that point. Really quickly, you can see down here through history that this configuration really has appeared quite a number of times. This is dating back to pre-global financial crisis, and it's persisted through these periods. And so what you can see here is the negatively stretched MACD. This one is the 12-week over 26-week one, whilst we've had some recovery in the 14-day stochastic K-D spread. Finally, going back at the very end, you know, as always, we examine a variety of different horizons, but actually the relationships seem to have been strongest over the 6-month horizon. In fact, the range is quite compelling, between almost 1% at the low end and almost 21% at the high end. And you can see that the relationship here is really quite strong. The hit ratio was 89%. Finally, the scatter plot down here also shows you that actually the convexity of the relationship is really quite compelling, because when in the past this didn't work, the losses seemed to be quite minimal, but there were a couple of cases where subsequently the stock rallied as much as 10 to 15%. So certainly something worth looking into, see how it fits with your analysis, and then of course decide whether or not this is a situation that's worth pursuing further. In the global daily brief today, we also take a look at a couple of structural things that are happening with inflation. There's a very interesting article that we describe and talk about a little bit more in depth, and also discuss what it might mean for the equity market. Again, thanks for your attention. If you want, you can check us out on toggle.global, and you can also take Toggle Copilot for a test drive if you so wish. Thanks again, and we'll see you on Monday.